What's going on, guys? How are you? How are you doing? This is Shocks and this is ShocksCapital YouTube channel. Today we want to talk about how to trade the strategy that is based on demand and supply. So I'm going to show you how to trade this strategy like a pro, right? So what we are going to do now is to have just 3 scenarios that we are going to be looking at. So this is scenario number 1, and scenario number 2 we are going to be having something that comes from the peak, something like this. So this is scenario number 2. Then scenario number 3, what are we going to be having? We're going to be having something that looks like this. I think let's do this. Right. So these are the scenarios that we're going to be having. So these lines that you're seeing on your screen right now, this is, or it's depicting the movement of price, or the movement of price on your chart. So what you want to be doing at this particular zone is to be marking the zone that gives birth to the aggressive move that you want to catch on the next trade. So if you see price breaking a high like this, it should show you that price is in an uptrend. And if you see price not breaking a high like what you are seeing in this case here, not breaking this high, it should show that you are kind of reversing. And if you see price breaking here and maybe possibly coming back to this area here, it shows you that price is in a continuation move, right? So what you want to be doing here is to understand that when these moves happen, and we are talking about these moves that are going up, right? When these moves happen, and this move, let's say here we are looking at this move that goes down, right? And here we are looking at this move that goes up. So these are our impulse moves, right? These are our impulse moves. So when these impulses go up like that, we are going to be looking from where they started, and at that position where they would have started, we are going to likely find some price action that looks like this, where price is just consolidating before a move. So this area is what we are concerned with. That is the area that we want, and that area we want to see price coming back to that area like this. And this is what we are calling a demand zone, right? So this is what we're calling a demand zone. And if it's the other way around, where we are having price doing this consolidation and then breaking out to the downside, then this is what we call a supply zone. So you might be asking yourself, how then are you going to be trading something like this? It's very simple. We are going to identify this zone, and you are going to wait for a steady retest of price that looks like this. Remember, when price is let me just remove all the drawings, right? So that I just show you something very clean, right? So this is your supply zone. Price goes down, right? And you mark that supply zone with your you mark that supply zone with your rectangle right here. So this is your supply zone. What you are going to be waiting for on this particular zone is very simple. You're going to be waiting for a steady retest of that particular zone. When price gets into the zone like that, you retest. You then wait for price to expand, going the other direction. So this idea of price retesting this demand zone or supply zone in this case is hinged on price making a steady retest. And you are not going to be liking something that doesn't give you a steady retest like this one. This might actually do this and then break your demand zone. So you need a steady retest or a steady movement of price back to the zone that you would have marked, right? So from this, you are going to understand that these demand zones sometimes may be they range from 1 to 3 candles, right? You can see 1 candle there and mark it as your demand zone, and you can see 4 candles there and mark it as your demand zone. So let's go back to the drawings that we started with. If you see price doing this, right, price has taken out this high. As you can see, it's taken out this high, and what you are going to be doing is very simple. You are going to be waiting for price you are going to be waiting for price to actually retest the demand zone that will be most likely in this area. So this is what you're going to do. So this is a continuation trend. Then the other one, you are looking at a reversal where price is currently here. And what are you waiting for? You're going to be waiting for price to actually retest this particular zone, and sometimes we call this zone a source. So this will be a reversal setup, right? Then after that, what are you going to see? You're going to see what we call a flip setup, where you are going to be seeing a demand zone. This was a supply zone in this area, right? This was a supply zone. Price was supposed to what? To bounce off this zone, but look at what happened. Price just struck through, and what you want to see is a steady retest of this zone, and price is going to be what? To be giving us a setup in this area, and we go up. Same applies here. You want to see price going back and giving us a setup and going down. And same applies here. This is just another setup that is a continuation, and this is what we are waiting for. And I'm going to show you again what you need to do in this area for you to what? For you to catch this trade. And remember, guys, if you're going to be trading currencies, if you're going to be trading indices like I'm doing, you need to be trading with a reliable prop firm. And there are reasons you should do this. Number one, for the capital. You can't spend your whole time trading with $100 account. Get a $25,000 account and leverage your success. If you are a serious trader, you should really think about increasing the capital that you are trading with. And if you are a trader who likes to develop his or her discipline, the prop firm way is the right way to do. You should not be trading things that move any direction anyhow, and you don't have any rules, and you trade some things that do not respect your stop losses and your take profits. You need to be trading with a reliable prop firm, and I have a reliable prop firm. The links are in the description down below. Make sure you join Funded Next. You get your challenge account using the link in the description down below. You use code SHOCKS. You use the code SHOCKS. After using the code SHOCKS, you should receive 110% of your refund when you pass your challenge. So this is what we are doing, guys. I'm trading with Funded Next, and so far I'm looking at 2 payouts, and it has been very well. So what you need right now is a prop firm on your side. And remember, Funded Next will give you your payout in 24 hours, and if they don't give you in 24 hours, you are going to get a $1,000 extra on top of your payout. So imagine you are going to withdraw $30 and they don't give you in 24 hours. It just means that you're going to get what? $1,050 or $1,030, 1,000 plus your payout, right? So let's go to charts, and I'm going to show you how to actually get a payout and trade, right? So what we are doing here is very simple. We want to mark our demand zones, and we want to what? And we want to understand how they work. So let's look at this particular zone. So this is Euro USD. If you are trading on Funded Next, you should see the same charts, right? No manipulation, no gimmicks, right? So you have price going down, then price retracing, price going down again, retracing, going down, retracing. So at this particular zone, this is a movement of price. So what are you waiting for? You are seeing that price has taken out this low. This is your first indication of a what? Of an aggressive move. What are you looking for? You are looking for a what? A demand zone, which is this candle, or this, let's just mark the zone, or this zone right here, right? Let's adjust this so that we capture all the candles in this area. Let's do this. So something like this. So this is your supply zone. What are you waiting for? You are waiting for price to come and retest this supply zone steadily. So this is the H4, and if you go to the right, so this is the H1. Let's just use the H1 here to illustrate what I want to see here. Let's just use the H1 here to illustrate what I wanted to show you guys. So you see price doing this rise, and as soon as price touches here, what are you waiting for? You're just waiting for 2 touches at that particular zone, and off you go. And look at the movement that price did. Or you might actually wait for even 1 touch at that particular supply zone, and go for what? Go for the next low, and the next low that you are seeing is this one. So had you taken this trade on this particular zone, you could have made this much pips, as you can see from this one, from this particular zone. So you can do this even on H1. You can look for your supply zones on H1, as you see like this. You get your trade at this particular zone, price moves away, and this is what you want to be doing as price goes away, right? So this is what you want to be doing as price is going away. You go. This is how price is respecting your what, your zones. So look at this and see how price is doing exactly as you want. And guys, I hope this was helpful. I'll see you in the next video. Shocks, and I'm out.